Hello, I'm Dr. Trader Amir. Welcome to my YouTube channel. In this video, I'm going to talk about one of the simplest way for predicting and understanding Bitcoin market by price action and candlestick patterns methods. At first, I'm gonna review some of the most important candlestick patterns that I talked about them in last sessions. The first one is shooting star, and shooting stars are so important in defining the trend of the market. And shooting stars have a long upper shadow in compared with their bodies, and also they mostly happen at the end of uptrend. For example, in this market, we can see that at first there was an uptrend, and when the market sees the shooting star, it suddenly changes its trend to downtrend, and the price falls sharply. The second one is long body candles or high momentum candles. These candles have so long bodies in compared with their shadows, upper shadow and lower shadow. And when we see these long body candles, it means that the market gonna keep its trend. For example, in this market, in this instance, we see that at first the market is uptrend, and when there's a long body candle, it means that the market gonna keep its trend in uptrend, and also long body candles are so a strong signal. The third candlestick pattern is bullish reversal. For defining the bullish reversal, there is two conditions. For example, the first one is the lowest point of the green candlestick should be lower than the lowest point of red candlestick, and also the closing price of green candlestick should be higher than the closing price of the red candlestick. If we see a bullish reversal pattern in a trend, and also that has these two conditions, it means that the trend gonna change from downtrend to uptrend. Another strong candlestick pattern is evening star. Evening stars are mostly happen at the end of uptrend, and when the market sees them, it means that there is going to be a huge change in the trend of market. And also, the evening star pattern comprised from three candles. The first one should be a green candle. This candle can be red or green, but the third one should be a red candle. And also, there is one condition: the if this is a midpoint of green candlestick, the red candlestick lowest point should be lower than the midpoint of green candlestick. And also, for example, in this market, after uptrend, the market sees the evening star candlestick pattern, and the price decreased sharply. And another one is hanging man. Hanging man is so similar to the shooting star, and it is like a reversed shooting star. And also, in hanging man, the lower shadow must be more than 2 times of the body of candle. For example, if the body of candle is about 1 centimeter, the lower shadow of candlestick should be more than 3 centimeter. And it mostly happened at the end of uptrend. For example, in this instance, after uptrend and after one increase in price, when the market sees the hanging man candlestick pattern, it changes its trend to downtrend, and the price decreased sharply. Another candlestick pattern that is so important, and it is worthy to know and understand, is bearish engulfing. And it mostly happens at the end of uptrend. And bearish engulfing means the red candlestick engulfs the green one completely. I mean, the body and shadows completely engulfed by red candlestick. And also, there is two conditions that make this pattern stronger and more powerful. The first one is the volume of red candle should be more than the green one, and also the second candle or the red candlestick should engulf the green candlestick thoroughly and completely with its upper and lower shadows. And also I brought you a real-time example from Bitcoin market. And as you can see, at first there was a uptrend and the price was decreasing from $60,000 to approximately $74,000. And suddenly the market sees bearish engulfing candlestick patterns, and also it changes the trend from uptrend to downtrend, and the price decreased from $74,000 to approximately $60,000. And this substantiates that this candlestick pattern is so strong. And also we can see that, let me use the pen. This is the volume of, excuse me for this mess. This is the volume of red candlestick, and as we can see, the volume of red candlestick is higher than the volume of green candlestick, and also the red candlestick engulfed the green candlestick completely, and our two conditions are considered correctly. And after this pattern, the market impacted by this pattern, and also the price decreased after this candlestick pattern. Another candlestick pattern which is so important is three inside down, and this candlestick pattern mostly happens at the end of uptrend. And when the market sees this pattern, the price gonna decrease sharply after it. And for example, in this instance, at first there was an uptrend and the price increased from $37,000 to approximately more than $45,000. And after seeing the three inside down pattern, candlestick pattern, the market changes its trend to downtrend, and the price decreased from $45,000 to approximately $37,000. And also there is another candlestick pattern which is three black crows, and it mostly happens at the end of uptrend. And the market is so sensitive to this candlestick pattern, and after these three candles, the market gonna fall sharply. For example, in this instance, at first there was an uptrend and the price increased from $31,000 to approximately $41,000. And after seeing three black crows, the market changes its trend and the price decreased from $41,000 to lower than $31,000. Thanks for watching. You can ask any questions related to trading and candlestick patterns and price action in the comment box, and you can directly message me and I will answer your question as soon as possible. Have a great day. Bye bye.